What is up, guys? So, I just wanted to get on here and give you guys a quick trade recap on two trades that I saw possible today using two different kinds of entry models. So, today, obviously, I made $392 on my funded account. On my other one on Top Step, I ended up break even today. So, let's take a look at the first one. So, I like to trade quarterly theory. I tell you guys this all the time in the Discord. And with that, we saw last night that we came up during London session above the midnight open. So we were manipulating up, expecting a move down today, which we did. As you can see, we got that. So excuse me. So we didn't get that right at market open. But the trade that I took this morning was this one where we accumulated. I marked out the true open of the second quarter for the whole distribution phase, right? And we manipulated below that one. And so then when we came back up at exactly 9 o'clock, I entered long because of the fact that we did this. We didn't see any kind of retracement, or if we were going to continue down, right? Because we manipulated up during London. I wanted to see here that we would manipulate up to make it that this distribution of the big distribution was going to see a move down. So because we have that counter expectation here, I thought, you know what, we're going to want to see liquidity first before any kind of movement down. And the best place to get liquidity is from old highs and lows. So what do we have? This previous day high right there on Friday at 3 o'clock in the afternoon from Friday, right? That is a perfect take profit. So if we went long right at 9, I enter long right at 9 o'clock. I don't wait for any kind of confirmation just because I think that, yeah, I'm pretty confident that this is going to go seeking liquidity. So taking that trade was a 1 to 1.38 if you decided to take a stop here at these lows. And then obviously we see that it keeps going up and it actually reached a 1 to 3, which was a pretty solid risk to reward there. If you took some off and left the rest, however you wanted to take that. So that's one trade that you could have taken. There's another model that you could have taken as well, which is basically the 2022 model. But here is showing you exactly how you could have taken that. So we know that in the core concept videos, ICT tells us to mark out the daily highs and lows. So taking Friday's high right there and low, we know that price is going to react to it somehow. So here on the 1 minute chart, we know that we have liquidity right here on these relatively equal lows. And then we have these relatively equal highs right there. So what does it do at market open? Let me make this look better for you guys. Right at market open, we open up, push right into it, come back down. We push one more time into it before coming down and creating a market structure shift, right? So we have a market structure shift right there, but we don't see any kind of fair value gaps for entries. You could, if you wanted to, taking it off of this order block right there. Once it created that market structure shift, so your entry would be right there. We're looking for a short, and the stop would be this high. And so we said that the take profit would be the relatively equal lows that we had right there, which would give us a 1 to 1.39. Obviously, this trade took a little while to get there. It wasn't a right away thing, and so that's one way you could have gotten it on that order block. Another one, right, if you had that market structure shift that you were so confident in, and we hit this liquidity area here, there you could have gone to a 2 minute time frame and see, if there was any kind of fair value gaps on the 2 minute time frame, which there was one that I saw right here, right there. Your entry could have been that fair value gap, and honestly, you could have entered on this candle seeking this low right there, which would have been a much nicer risk to reward. And so let me change this song, not the songs that I usually have, but Yeah, I mean, that's another entry right there, that fair value gap right there, because it broke structure. Very sloppy today, though. But regardless, it still did. It broke this structure right there. It came back up into that fair value gap. Boom, you could have hit this low as like a take profit one, and that's a 1 to 1.2. So not amazing, but still something. That would have been hit so quick in the morning. And then you were looking for these relatively equal lows right here. So you would have targeted either this one or this one right here. So that's a 1 to 2.33, which is a much nicer trade. And as you can see, price came down, boom, done. So on Mondays we consolidate. We more than likely will consolidate, and we might get a move like this sometimes. But we're going to trade within a range always, meaning that there's going to be a high and a low that we're going to just keep bouncing off in between. And what did it do? I mean, price didn't keep just dropping and dropping. It's already 3 o'clock in the afternoon. It didn't keep dropping. It actually what? Came down, took out this liquidity, and boom, created a market structure shift. Now we're heading back up into the range that we were in. So those were the two entries, right? The quarterly theory entry that I showed you before, right there, looking to go long, target that liquidity. The second one is that 2022 model. We swept liquidity up here. Being patient, you wait for a market structure shift, retracement back into a fair value gap, target lows, 1 and 2. We're over there, and that's it. Those were the two trades I saw today. I'm sure there was other different kind of trading models, but those are the two that I saw, and I wanted to let you guys see those as well. So we'll see what tomorrow brings, guys. Take care.